Tanya is now joining us. She was at the listing ceremony. Tanya, one would look and say that the stock is down about 5%, locked down in the lower circuit despite being trade to trade. But 250, 236, that itself is a price which is much higher than what the street was anticipating.
That's exactly correct. In fact, analysts were estimating a listing price of anywhere between 150 to 200 rupees per share, and this is clearly much above their estimates. At the current market price, if you look at it, the market cap of the company is crossed about 50,000 odd crores, which is much higher than what Premji Investments transaction valued the company at, which was about 32,000 odd crores. So that is one clear winner coming in there. If you look at why exactly the stock has actually come off from its listing price of 250, well, there's two things. Firstly, it's in the trade to trade segment, which means that there's only delivery based buying happening, and that might keep trading muted a bit in the stock for until this particular update appears. There's also one more MSCI overhang that might come in. In fact, if you look at it, this was a demerged entity from Grasim, and because Grasim was part of the MSCI index, EB Capital was automatically part of that. However, there are some criteria that MSCI has which EB Capital cannot meet, and because of that it will come out of the MSCI index today. That could see some of the sell flows and the reason why this 5% downtick has come onto the stock. However, if you look at the stock in itself, it has four main business segments which are currently performing very well. There's NBFC, HFC, there's the life insurance business and the AMC business. In fact, in our conversation with the management, he also mentioned that the growth trajectory for each of these businesses would be strong, particularly for the NBFC business, wherein he's focusing on SME lending. In the housing finance side, he's mainly focusing on the self-employed segment. He already has a 5,000 odd crore book in housing finance. In terms of the life insurance business, it has been growing at a 30% kind of growth rate, and he expects that particular growth rate to continue. Similarly for the AMC business as well, given the fact that there's more interest in the financial savings aspect because of demonetization. Lastly, the company also said that he would be looking to infuse some capital in the NBFC as well as the HFC businesses, as well as the new forays into health insurance and into asset reconstruction. However, there is a 5% set aside for a strategic investor in the holding company section. That transaction is expected to complete maybe in the next financial year.
And let's leave it at that for now. And before we go any further, here's the man of the hour, Kumar Birla himself, talking post the listing.
So I think our unflinching support on our customer and providing them with a universal financial solution is the big one for us. Also the fact that we have a very good quality of book with hardly any NPAs, which I think are the best in class in the industry. Also a full-fledged financial suite of products that meet the demands of our customers throughout his or her lifetime. So I think all of those are star strengths. So health has been one that we have invested in the last 1 year. We are also looking to make a foray into the asset reconstruction business. So these are the two new ones that have joined or will join this table. So I think all I'd say is that we are happy to look at opportunities that create value. We don't have anything specific in the pipeline, but we do recognize that this is an industry where consolidation is fast happening, and if there is an opportune moment and there is an appropriate opportunity, we're always willing to look at it as long as it's creating shareholder value.
Well, that's Kumar Birla talking about the new listing. I have to say, it's going to be a very quiet listing. The stock is also down 5%. So that's as far as EB Capital goes, currently trading at 237 rupees and 50 paise. And Pankaj, look what's flashing at the bottom of our screen. The M&M auto sales for the month of August are out. It's standing at 42,116. We'll just check how this is. We were expecting about 41,000 units, so clearly doing better than what the ET Now poll was. I'll ask my producer to show you the intraday chart as well. The stock has slipped into the red. You've got it rising, the auto sales up by about 4%, coming in at 42,116 units year on year. That's a year-on-year comparison, but post-demonetization, post-GSE, I think a month-on-month comparison, Pankaj, is what would really be more appropriate.
Right, but again, Nanda, you can do month-on-month comparison. What you're saying is right, but then if you look at the YOY comparison, there is always that impact of festive season that also comes in. So it's very difficult, to point out actually the trend of these companies. I think the best is 41 was expected and 42 is what they have done. So essentially, it just tells us that this is the sort of the expectations were 41,000, 42,000 is what they have done. So it's broadly in line with expectation, and there is a little bit of positive bias. But as you're saying, that trend, whether you look at it on a month-on-month basis or on a YOY basis, can be slightly on the confusing side. We just focused on, or we just heard from Kumar Mangalam Birla. Let's also listen in from Ajay Srinivasan. He's the CEO of the listed entity. Let's listen in what he told at the sidelines of the listing conference.
I had said that under the scheme that we had originally set out, we had set aside 5% for a strategic investor to come in at the holding company. In those discussions, and that option is always an open option for us.
Right, and in the NBFC business as well, I wanted to know, you said you'll start focusing more on the SME lending section, and you don't have any plans for MFI at the moment. Could you explain the rationale behind that, the product mix, and how do you expect the overall business to grow?
So we think the SME sector is really a massive opportunity in the country. I mean, you look at the number of SMEs, and many of them don't have access to credit, many of them don't have access to adequate credit. So we think that that's a really large segment for us to be able to focus on. It gives us a long runway for growth for many years to come.
And within the housing segment as well, a very small base on your book. So which segments would you focus on in that?
So we started our housing finance business actually only 2.5 years ago. So we're relatively new, but we've been growing very rapidly. We now have a book of over 5,000 crores in the housing finance business. Our focus there is largely self-employed people, though we do cater to salaried employees as well. And we've recently launched our affordable housing business, so we'll use that to get into smaller towns in India.
Okay, last two questions, sir. Coming on the life, the life insurance segment, how do you see the premium growth coming in? Because of demonetization, lots of physical savings have come to financial savings. So even the AMC business is expected to do very well. What are your plans for those two?
True, I think demonetization and the real rates in the economy are favoring financial assets, and we're seeing that across the board. Last year our life insurance business grew over 30%. First quarter again we've grown over 30%. So I think we've got good traction and good momentum, and I think we're starting to see more people putting money into financial assets, which really augurs well for us.
Right, last question, sir. In terms of return to shareholders, etc., what is your target for the ROEs going forward? And also lastly, any capital plans in coming apart from the PMG investment 700 crores?
So return of equity varies across our business lines. So we have very high returns in some businesses where there's no additional capital required, like our asset management business, and some of our newer businesses are obviously still in investment phase. So I don't think I can give you a single answer for return on equity. For as far as capital is concerned, we will require capital for our NBFC, for our housing finance company, for our health insurance business, and that's where bulk of our money will be going in.